Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, January 12th, the year 2018. Time for the weekly wrap up. Hope you had a profitable week trading. And if you followed money and risk management and you followed your trading plan, system, method, you probably did. And if you didn't, well, that's on you. Can't blame me. I didn't click the mouse. Okay, here we go. The euro. The euro was down here. Now it's up here. Once again, all the gaps filled. Plain to see. And if we drop down to the daily, right here, we were in the wick zone. We'll talk about that in a bit, but it broke through the daily high, the previous day's high. Made a new high. And as you can see here, from closed open, we've got some nice moves. Very nice moves. You can see the ranges. We've got a couple over 200. Euro NZD, the beast. Look at this. Now here's the beast, right? No, this isn't the beast, but the pound New Zealand, 345 pip range. Boy, don't you wish you had shorted that suck? No, I mean long that. Look at that. The crossover of the daily open. This is movement. Okay, buy zone traders. You had one chance here, and right here, maybe you wanted to take that trade since it never seemed to drop below the daily open. 95 pips above the daily open at the moment. Rat zone traders, right here, there was no rat zone, but you could have taken a rat reversal here, actually, because right there really wasn't a rat zone still. So right here, this area would have been on top of this because it hadn't moved up yet. But as you can see right here, opportunity to trade the rat zone short. Once again, there was a trader who asked me, how do I stop getting stopped out and make losses when I trade this? Once again, if you shift up to the H1 candle, you can see here you get much better signals. What signal was here? Well, here was the top. It made a new high. It cut back down through while in the rat zone. So right there, you can take your chances, and it would have paid off. Or you could have waited till the candle went from red to green, because yes, the rule of thumb is don't trade against the H1 candle color. But sometimes you bend the rule, sometimes you break them. Just like in the Matrix. And here we go. There's the open. There's the pivot. It never broke through. There was no pivot, so there's an open pivot. It's going to be there on the euro. See if that pivot fills sometime in the future. Price action, once again, simple. You had a 3-ball there for the 3-level ZZ traders. You see it crossed the line, 3-ball behind you. You could have taken the short there, or if you really were adventurous, you could have taken the short there. Following the price action, you see the 1-ball's coming back up. 20 was the trigger. Let's see, 28 was the high. Could have been in and out of that trade for a scalp. Yesterday's 5 lines, once again, it broke right through. Let's see. It broke through here. Pulled back, took some heat, or you just scratched the trade there. Once again, made some money, came back, gave you another opportunity here. And you can see that in the wick zone chart right there. Price does not like staying in the wick zone. I know, I say this every day. Hopefully, you guys will get it. And once again, oh, by the way, for those people who, I don't know, let's not even talk about those people. You know who I'm talking about. And we've got the holo set up, highest open right there. News came out. There was your trigger. Boom. Take the money off the table, because then the market's taking it right back. Squiggly line people, what can I say? And hardcore price action. I've done a few new things here. I made the open line like this. Dashed. Maybe even could give some user controls. I made a few observations here. If the ask is below the M1 open, which would be right here, you probably don't want to buy, so you get a long warning. Once again, you can just read the tape. So right here, you see this is the ask line. It dropped below that M1 open. You see it came back just like it's coming back now. Oh, now you've got a new open. So the bid is above the midpoint. Short warning. Actually, maybe I need to put two messages out. It looks like we could have an open warning and a midpoint warning. But you see it gave you that short warning and prices moving up. Hardcore. Something else I think I'll just throw in here. I was talking to a trader yesterday, and he was kind of on the wrong side of a trade. And I told him, I said, you know, you might want to take the little loss, because you can make it up a lot quicker. You can make up a little loss a lot quicker than you can a big loss. I mean, it's one of those things that's, you know, sounds like common sense, but sometimes as traders, we get into trades and we just, our minds just turn to, I don't know, turn to crap, I guess. They just, doesn't work right. It's like you're making decisions and you look back and you're like, what was I thinking? Well, you shouldn't have been thinking. Number one, you should be reacting to the market. Number two, you should have those action plans planned out ahead of time. You know, if price reaches here, this is what I'm going to do. If price reaches there, I'm going to do that instead. You know, usually buy, sell, exit. And these things should all be done ahead of time. It's like, I think I might have made a video about this, but I said, you know, really, we're not, us traders, we should be nothing more than monkeys, you know, pushing levers or clicking the mouse to get a banana. I mean, really, we should be trained monkeys. We see this, we do that, and we get our reward most of the time. And it's really that simple. There's no more to it. And somebody could say, well, then you could just build an EA. Well, guess what? Lots of people do. So, I mean, it's really just that simple. There's nothing nothing more to it. So, you know, if you get in a trade, you buy and it starts to drop, you know, take a 3 or 5 pip hit. You know, maybe just get out of the trade. Possibly even take the hit in reverse. You might make it back that way, because when you put a trade on, basically you're saying, I believe the market's going from A to B. Or, you know, from 0 to 1. But if it starts heading to -1, guess what? The market's showing you that your analysis and or your timing is not profitable at the moment. So, I mean, I equate it to elevator. If you get, if you're on the 10th floor and you want to leave the building and you step on the elevator, maybe you weren't quite paying attention, you were looking at your cell phone or something, and next thing you know, you wind up you're going to the 11th floor and the door's not opening and you're going to the 12th floor and there's, 50 floors in the building. Are you going to wait and see how high it goes, or are you going to get off that elevator, press the button, get out, and then take an elevator when it's coming back down? Or are you just going to ride the elevator? I mean, it's up to you. But the thing is, in life, well, you lose a little time. In trading, you lose some time and you lose some money. Because it's possible it never comes back, it never gets to the ground floor. It just keeps going and going and going. So, I guess, Pro, you said you like listening to these videos, so I'm not talking about you. I'm not particularly talking to you, but I'm just talking at the moment. Oh, I see something else I've got to change. I guess I added the spread here, and I lost some space on this side, so I might have to put 2 lines or do something like that. I'll figure it out. But as you can see here, hardcore price action. Price is just staying above these M1 opens. They're making higher. There's like, the ask is not getting below that open, so you just really don't want to be shorting. Just, just hardcore price action. And let's see, let's just go back and take another look here. And I think there was, well, let's see, who was that? Let's take a look here. Who was the grand prize winner? The pound, New Zealand dollar. Look at that move. Now, I think I told you guys yesterday I was looking for a short on the New Zealand US dollar. We're 41 pips off that high. So I don't know if any of you guys put that on your radar or not. But that one came to pass. Oh, I guess I might talk about those people real quickly. There was a guy over there on that MQL5 forum, and I don't know if you watched my, I guess you could call it rant video, the one I put out yesterday about I do not sell indicators. And come to find out, the guy, he replied to somebody that, oh, well, that's beyond the scope of this indicator, but, if you want to hire me as a freelance, So I realized that, hey, this guy's basically, he's basically advertising the fact that he's a programmer for hire, coder for hire, and he's the one accusing me of advertising just because I have some of the indicators that I wrote, some that you can pick up for free if you know where I post and download them. And if you Google TheRumpledOne, I mean, it's not going to take you too long. Or you could Google the mother load, and then you'll, MT4 mother load, and you'll find it right away. And then, there's some indicators if people like what I do and they send a donation, I send them out as a thank you. But, once again, I put out a whole video. You don't have to get my indicators to be profitable, because it's not what you trade. It's not what you trade with. It's how you trade it. TheRumpledOne signing off to enjoy the weekend.